In this video, I'm going to share what dividend investing is, what a dividend is, how it's calculated, what it means, what are the payouts, and most importantly, how to calculate the payouts. When I first started investing and kind of dabbling in it, this term dividend was thrown out left and right. And I'll be honest, guys, it was like 3 weeks before I actually did the research and figured out what a dividend was. I was like, what the heck are they talking about? I do not understand. I had never heard this term dividend before, to be completely honest with you. And now it's something that I throw out just like everyone else. And it's just a common term that you use in investing. Disclaimer, I may not explain this all in the most technical way, but I'm going to explain dividend investing in Kelly terms and in a way that I can understand it, and hopefully in a way that you can understand as well. Kind of break it down, simplify it, put it in normal people terms so that you can understand fully what dividend investing is, because honestly, dividend investing is so cool, such a game changer, and a great way to build wealth. Hey friends, welcome to Freedom and a Budget. I'm Kelly from freedomandabudget.com. If you're new here, welcome. My channel is all about living life well in a budget, and they don't have to be constricting, but they give you freedom. And I'm so excited to start a series with you guys on investing. This is going to be a multi-video series. I'm honestly not sure how many videos, but I'm really excited. I've got so many videos planned for this. It's gonna be awesome. I'm gonna dig into investing, basic terms of investing, how to invest in different things, how to buy stock, what an index fund is, all this different stuff. And it's going to be geared, not specifically, but mostly towards women, and get into investing for women and show women that it's not as scary as it needs to be. So if that is something that interests you, I hope that you subscribe. If you are wanting, during this series, my budgeting videos or my saving money videos or my making money videos, I have tons of videos already on this channel, over 700 videos for you to watch. So during this time, if this isn't the type of video that you want, go check out those. I also have my budget report cards that are now on my Patreon. Go check those out. There's all sorts of different types of videos on there. I'll do videos, more personal, like real personal stuff that I can't share on YouTube. That's all going to be on my Patreon. So links are down below. Go subscribe there. And let's get into dividends. Okay, so the first question that everyone has on dividend investing is, what are dividends? What exactly are they? Well, according to Investopedia, a dividend is the distribution of a portion of the company's earnings decided and managed by the company's board of directors and paid to the class of shareholders. The best dividend payers are established in it for the long haul companies. Think companies that are based in oil and gas, banks and financial institutions, health and pharmaceuticals, and utilities. These companies tend to issue regular dividends because they seek to maximize shareholder wealth in ways aside from normal growth. So basically, dividend investing is really, really great for beginner investors because there's two different ways that you can earn income on dividends. You can earn income on dividends through the dividend payouts like we just talked about, and then also on the natural growth of the stock. So as stocks grow over time, then you're going to get that increased value as well, which is great. So dividends are a great way, especially for beginners, for building wealth, because you can reinvest your dividends, and then that helps to buy more into the share to make bigger dividends over time. And then it's just a compound effect of making more money on more money on more money on more money. Okay. Now, some general rules for dividend investing. One, don't put all of your eggs in one basket, just like with streams of income. You guys have seen my video on multiple streams of income and the importance of multiple streams of income and how we have 7, and not putting all of your eggs in one basket. So with dividend portfolio, you don't want to have all of your portfolio for all of your investments only in dividends. That, to me, honestly, that isn't that good. You want to have index funds and 401k and IRA and all of that stuff. We're going to have another video later on the steps of investing and how to build a portfolio in investing and all of that. So don't be putting your eggs in only dividends. To me, honestly, that's not wise. You want to dabble a little bit here, dabble a little bit there. Number 2 is to always reinvest your dividends. As we said, dividend is not what we're living off of right now. Some people have honestly built their dividend portfolio to where they can live off of it, off of the monthly dividends that come in or quarterly dividends that come in, which is just crazy to get to that point. But while you're building wealth, while you're building your portfolio, always reinvest your dividends. As you can see here in my M1 Finance account, there's 24 cents there. Now, that's not a lot, but that's from one dividend that I received a payout, and that's just one part of my portfolio that just came since my last stock that I bought in M1 Finance. So that 24 cents when I make my next purchase, I'm going to reinvest that. So you can do auto reinvesting with M1 Finance, or you can just put it towards your next purchase. But I really would not recommend cashing out and pulling out that money. No, keep it in your portfolio and reinvest either in the same stock or more dividend stocks or growth stocks, but don't pull it out. If you want to check out Robinhood or M1 Finance, get a free share, check out the description box. I got links in there. Also Webull, which is a great platform, a little bit more advanced, and they give you 2 free stocks. One of them is going to be up to $1,400. It's crazy. Go check that out in the description box, and it's a great way to help me out in return. Number 3 is to be cautious of high yield payouts. We're going to talk about how to calculate a dividend coming up, so stay tuned for that. But be cautious of high yield payouts because they can raise some red flags. I typically like to keep it between the 4 to 6% payouts, so that is my sweet spot. Now I do have some dividends that are lower, some dividends that are higher, but that's typically my sweet spot. When I do see a company that has super high dividends, I really do more research and dig in because that is a little bit of a red flag for me. Number 4 is what to look for when you're buying a new stock and a dividend. There's so much to look for, guys. So basically the number 1 things that I'm looking for when I'm buying a new stock is you need to know the revenue of the company. See if the company is growing over time, check their earnings, are they consistently growing over time? And then also look into how much debt the company has. If you're finding value in this, hit that subscribe button. It's a great free way to help the channel out. It really helps YouTube to push out my videos, and let's be honest, we need all the help we can get with what's going on here on YouTube. Next, we're going to talk about how dividends are taxed, because honestly, guys, this is a big thing that a lot of people, when they're so excited about getting into investing in stocks, they don't think about taxes. But that's important. That's something that you really have to look at, is how dividends are taxed so that you can make the best decisions to take advantage of those taxes. So I'm going to throw up some slides because I know that I'm a visual person. When I'm hearing something, I need to visualize it as well. Dividends are taxed in 2 different ways depending on what type of dividend they are. There's ordinary dividends and qualified dividends. Ordinary dividends are the most common type of dividend. They usually pay out from their earnings of the corporation. These dividends are taxed as normal income. So that means that normal income with your income taxes. Now, qualified dividends, that means that the requirements to be taxed as capital gains are taxed on 20, 15, or 0% rate, depending on your tax bracket. And there's 2 different tax brackets that it would fall onto, either single filer tax brackets or joint filer tax brackets. So first we're going to look at single filer tax brackets. And as you can see here, the income tax rate is between 10% and 37%. So on your normal taxes, they can be taxed up to 37%, which is crazy. That is huge. That's a lot of money. But if you look at the capital gains rate, that's where qualified dividends are taxed. You can make all the way up to $40,000 and not have to pay capital gains taxes on them. Or if you make between $40,000 and $1, all the way up to $441,450, you're taxed at 15%. And then the next step is $441,451 or more, which, let's be honest, guys, that's a lot of money. That's taxed at 20%. So that is a lot less than the 30%. So even if you are a high income earner, your taxes are going to be so much lower on your capital gains from your dividends. And if you don't know what capital gains are, they are basically the earnings that you get. So they're not paying taxes on the whole stock that you own. You're only paying taxes on the growth that it's received. So say you buy a stock at $100 and then it jumps up to $150. You're not paying taxes on the $150. You're only paying tax on the capital gains, which is $50. Okay, and then real similar, this is the joint filer tax brackets, which is very similar to the single filer tax brackets. This one is just taxed a little bit higher because it's typically 2 people. So you can have up to $80,000 of income for the year for 0%, from $80,001 all the way up to $496,600, up to 15% is what is going to be rated at capital gains. And then $496,601 and more is taxed at 20%. So much different than the single filer, but that's because it's typically 2 incomes. All right, I hope you're following me. I know this is a lot of information, like kind of fire hose information, but I hope that I'm able to break it down for you. Next, we're going to break it down with some terms in dividend investing. This is terms that you guys will hear over time as you learn more about investing. As you're reading investing books, my future videos on investing, you may hear some of these terms. So this is going to be great, kind of like a dictionary of terms. So the first one is dividend yield. And a dividend yield is the ratio of a company's annual dividend compared to its share price. The dividend yield is represented as a percentage and is calculated as follows. Dividend yield equals annual dividend divided by the share price. And we're going to get into this in a little bit, so stay tuned. I'm going to show you like a breakdown in Robinhood of how to calculate a dividend yield. Next is the payout ratio, and that is a ratio of total amount of dividends paid out to shareholders relative to the net income of the company. It is the percentage of earnings paid to shareholders in dividend. The amount that is not paid to shareholders is retained by the company to pay off debt or to reinvest in core operations. Next is cash payout ratio, and that is a financial metric showing the proportion of earnings a company pays shareholders in the form of dividends, expressed as a percentage of the company's total earnings. On some occasions, the payout ratio refers to a dividend paid out as a percentage of a company's cash flow. And then a couple other little ones is PE ratio, and that is price to earnings ratio, and then EPS, and that is earnings per share. Okay, now I'm going to bring you along in Robinhood and show you how to calculate a dividend, a real life example on my portfolio in Robinhood. And as you can see, I just hit $3,000 on Robinhood, so I think I need to do a portfolio update. So we're going to go to AT&T. So the share price right now this changes throughout the day. Right now it is $30.86. So then we're going to go down to stats. And you see in the bottom right under stats is div/yield. So that means dividend yield. And that is at 7 right now. So what we're going to do, 30.83 times 0.07, because it's 7%. Okay, so that is $2.15. Really 16 cents because it's 0.158. So 2.158. Then we're going to take that and times it times however many shares we have. So I have 5 shares of AT&T. So now we're going to take that. Now this 2.15, that's my total throughout the whole year that I'm going to receive. So we're going to take that and times it by 5. So I'm getting $10.79 for this dividend for AT&T. Now this is just one stock in my portfolio. If I have multiple stocks in multiple different companies, this is just going to come in and it's going to be great. So a little bit from each company. Like I said before, we don't want all of our eggs in one basket. So now we're going to take this and divide it by 4 because AT&T pays quarterly payouts. So that is going to be $2.69 per payout that I receive, which is awesome. And that is quarterly, so that is for all of them. So every 3 months, that's going to be my payout for AT&T. So that is how you calculate a dividend, and that is the best part is those dividend payouts. Like I said, you just get more and more and more, and they're awesome. And hopefully down the road, you'll be able to get a nice living off of them. But in the meantime, reinvest your dividends, build up that portfolio, build up that growth. Let's keep the conversation going and talk about what stocks I'm buying during this market crash, what's going on. The market is crazy right now. So check out this video here on what stocks that I am buying. And if you want to know how we built up 7 streams of income, how we've been able to diversify our income, check out this video here, making $10,000 a month.